Welcome to another episode of Limitless Trading. We just wanted to touch base. There wasn't a lot going on in dark pools today, but we had said if 660.77 or anything under 660 held, that it was something to consider, right? I said, guys, at FOMC, I wasn't trading. I got stopped out on my calls here. I simply tracked it just to see what market makers were doing, and what the next day was going to look like. But I rather pay more to know more. I want to see calmness. I want to see what the overnight looks like. So what happened? The market decided to, from here, right? Let's just say you decided to go long after the recovery of 567, which I said, hey, wait for the candle to close, some sort of back test. If you went long here, then you were long most of the night, right? But the market sold off sort of into the open, right? And that was my ticket. I had an alert set for number one, under the 10 SMA on one chart. I have the 10 EMA on another. I use them both. One is more sensitive to price movement than the other, but I use them both on dueling screens. And I said, okay, first of all, my first trigger went down. Then what do? I watched my first level, which was 662 and change. The next level was 661. Neither of them held. And I said, if the market goes under 660, I would consider shorting. Well, it went under, but it didn't turn into a rejection. Once this candle came up and connected and held, I took my long here. So this is your drop down. I take my long on the breakout of 660. As a matter of fact, I know for a fact that I took it once it went over 660.77, and then I just started. I started moving my stop loss, and I left it the entire day. What I usually do with my stop loss is, once it hits the first level, I start exiting any contracts that I have, any shares, which I actually took more shares than anything else. I'm very, very low on option contracts, just because the options movement I don't like, and we're already in the nosebleed sections, and I already had long options from before. So I start trading equities. I make a little less, but I feel safer with them, because if my equity comes down, I can just hold on to it. I can hold on to SPY because I know there's 666 and 670. Am I going to make the same as an option? No, but my movement is way more stable than anybody else. So I could just sit on it with all the options that I already have, the long calls I took, and the long puts that I'm hedging with. But if you went up here, you could have easily just had your stop loss run. Once you tag the 10 EMA or the 10 SMA, you're moving your stop loss, and you don't assume where you're going to go up or you're going to go down. But again, if you stop out, let's say you get up here, you decide, okay, I'm over the 10 SMA, I want out. Great. So what do? I watch again for the breakdown under the 10 SMA or the 10 EMA, because on the daily, we are on an uptrend. There's not a lot for me to short heavy because we're still haven't broken the daily uptrend, hasn't broken down. But I break down over the 10 SMA. My first dark pool was 662.38. What happened? It went under, it recovered. My first green candle over, I could take a long again. And again, I'm moving stop loss right as soon as I'm crossing the 10 SMA or the 10 EMA. And it is a lagging indicator, but I can use it whether it makes me 2%, 1%, 5%. And if you're using something like Robinhood that uses payment for order flow, your contract costs are minimal. And you don't have to play. You could do fractional shares on there, but you can, again, just let it ride, move your stop loss, and if it breaks under, you're out of it. You're done. You collect your pay. If it goes up to 666, 6070, great. You're getting paid again, but you're not assuming anything. You're not assuming it's going to go down. You're not going to assume it go up. Now, if in fact it breaks down, so let's just say, for example, one of our guys noticed that during the trade, we went under. Well, if we go under, you can take a short going down to get liquidity at 662 or under. Absolutely. But keep in mind that if it's defending, you're not getting paid very well. So as soon as you break down and you're green, you want to roll your stop into the very first dark pool, which was 662.38, which defended. And after hours, it's rolling up. So keep in mind, when you're shorting against trend, even if it's on the smaller time frame, you're looking at the daily. The daily trend is up. You want to keep your stop loss tight, because again, if you broke down, all right, you were green, maybe you won 2%. But as soon as the market decided to go up, you're being squeezed, and your put is going worthless if you don't buy yourself some time. So make sure that when you're trading against trend, even on a smaller time frame, you're stopping immediately. So this candle goes red. Hey, I think it's going to be red again. Okay, you could take your short here. As soon as you're under the 10 SMA, you're moving your stop loss. And when you're shorting, you want to keep it close to in the money. So if you couldn't do, let's say 662 or whatever this was at the time, you want to take your short into the closest, nearest dark pool or buy time, right? Buy yourself time so that you don't get the Greeks against you, which we teach in our courses. So use proper risk management when you're trading against trend, because again, I said I have long puts all the way into now. I have puts into November. That VIX player is getting larger and larger. And our AI says that VIX is going back to 30. What's going to cause it? Could it be the next CPI, which is going to probably break 3%? Could it be the court ruling on the 5th? Could it be something with Lisa Cook and the Fed? We don't know. There's so many catalysts and so much chatter coming in the market that it could be anything. Our job is not to guess, is to look at the price action, see what levels are holding, and execute. Rinse and repeat over and over and over. The longer you do base hits, the quicker you win the World Series, or inches if you're an American football fan. Any questions, any concerns, post them down below. Any tickers you want to see, please post them and we will email you directly if there's any intelligence to it. We did just open up our monthly subscriptions where we will send you out alerts with risk management. There could be one ticker a week, there could be 10. It's on a monthly basis, depending on the AI. So again, it has to be something that you want to do long term. It was requested by some of our members. They didn't want to buy per ticker. But with that subscription, we'll send you the alert. It's not going to be individual. It's going to be whatever our AI said. We'll just start sending them out. Whether it's 1, 2, or 10, you'll be receiving them. Thank you.